Hello, everyone, and welcome to another episode of Travillian Next. My name is Dimitris Malisianos, Principal of Banking and Fintech here at Travillian, and I'm going to be your moderator for today's episode. Travillian always tries to be in the epicenter of major news and events that are happening in the community banking space across the nation. I've specifically focused on the West Coast, and for this episode, I have the pleasure to introduce to you Ms. Simone Lagomarsino. She's the CEO of Luther Burbank Savings Bank, and she's here with us today to share some insights, experiences, and her perspective about the community banking space. Without further ado, let's dive right in.
Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello, Simone. Very pleased to meet you, and thank you for being with us here today.
Thank you, Dimitris. It's wonderful to be here with you, and I appreciate the invitation.
Thank you. It's our pleasure. Tell us a little bit more about yourself, Simone. I know that you are the CEO of a major bank in the West Coast of Luther Burbank Savings Bank. And tell us a little bit about yourself, your career trajectory, and how you got to Luther Burbank Savings.
So I actually started in banking right out of high school, actually. My sister actually worked at a bank. She worked at Wells Fargo, and she said, well, why don't you, come and make some money over the summer before you go to college? So I went and interviewed at Wells Fargo, and they hired me. I thought I would just work over the summer, and I was a teller and enjoyed actually being a teller. And when I went to resign because I was going to start going into school, they offered me to work in their operations center at night and said they really valued my work ethic. And so I went to school during the day and slept a little bit here and there, and then worked in the operations center for a while at night. And then what happened is one of the people I had worked with as a teller went to a community bank, and she called me and said, you know what, it is so different. It is so great. We'd love to have you. And it was a bank in San Dimas, which is very close to where I was going to school, which was Claremont McKenna College. And they were open until 7 o'clock at night, and then they were open on Saturdays. So I went there and was very fortunate because I got to, close it at night, and they let me during my school breaks go in and work on every single desk in the bank. And so I went there, and then I worked at another community bank. And then all this time I was studying to be an accountant. That was what I really thought I was going to be. So banking was kind of a way to make money because I was really going to be an accountant. And then, wow. Kind of an interesting career situation for me. And then I had worked at a couple different banks, and I had moved up, and I was actually supporting the CFO at a bank, and also working to support some of our customers with their treasury management services at the time. And one of our customers asked if I would be their CFO. And it was interesting because it was such an aha moment for me, because I remember thinking, well, gosh, that's what I studied for, was to be an accountant. But I couldn't get excited about the job. So I talked to my family and I talked to my friends and said, this is what I studied for, and maybe I should take it and be their CFO. And I still remember I drove out of the parking lot at the bank, still trying to figure out what I was going to do. And of course, having studied accounting, I made my T account, right? So I've got the pros and the cons and and I'm going through it all. And I drive out of the driveway at the bank, and I look at the trash truck that's in front of me on the street, and I think, we just financed that trash company. And then I'm looking around and I'm thinking, we financed that building, we helped that nonprofit. And it just like clicked for me. And I so look back and think, how fortunate am I that in my 20s, I realized I really loved what I was doing in banking. And that's why I couldn't get excited about this other job, is because I really loved what I was doing. And I felt like we were serving people and we were making a difference in the community. And that really resonates with who I am at my core. So I thought, okay, here I am in my 20s, just graduated from college. I'm going to be a banker, and I'm going to be the best banker I can be. And I said, I'm going to work to be CFO of a bank. That's what I studied. So now I'm going to make it happen. And literally not too long after that, I was, I think, 25 or 26. I was made CFO of National Bank of Catalina, of all banks.
Impressive.
That's a very
Very.
small bank, very small bank. But I was CFO there, and then I became CFO of Warner Center Bank and Ventura County National Bank, and continued as CFO, was hired then at Hawthorne Savings as CFO. And at one point, our CEO there left, and I was actually giving names. There's this person and that person who I've worked with before. You should talk to them to be the CEO here. And one of the board members who, I just so appreciate and respect, came up to me and said, "Simone, why don't you put your hat in the ring? You know what you're doing, and you could do a great job." And, I think back and think that was before the year 2000. I think it was 1998 or 1999. And it didn't even cross my mind until he said that, "Why don't you be the CEO?" And I'm like, okay, well, let me think about it. And I did. And anyway, so I became CEO, and we sold Hawthorne Savings very successfully in the year 2004. And then I've been at a couple different banks since then. And I will say that in the year 2004, I met the owners of Luther Burbank Savings because I was at Hawthorne Savings for savings and loans at the time. Well, I didn't really stay in touch on an ongoing basis. I monitored kind of how their bank was doing. I really liked Vic Trioni and his brother Mark Trioni, who were the founders of Luther Burbank Savings. Anyway, so long story short, in 2018, their CEO retired, and we connected back up, and they offered me the job, and I started in January of 2019. So that's kind of my career trajectory. I encourage people when I talk to our new employees, really consider what it is that's really important to you when you go look for a job, and most importantly, a career, and make sure that what you're doing aligns with your core being, because then you really can make a difference. And it's like, for me, fun going to work every day. It's not work. I just feel like, we're doing something good for our customers and making a difference, and for the communities.
This is absolutely impressive, because when I hear always, about any kind of individual who started, as a teller, climbed all the way up to CEO and running a bank, this professional knows exactly and understands exactly top to bottom how the bank works, because it's a talent that was able to use the skills, traits, and experiences in all levels, and eventually, became the CEO of a bank, just like you, Simone. So tell me a little bit more. What are some of the things that you primarily focused during, your time at the Luther Burbank Savings?
Well, and I'll say Luther Burbank Savings, we're now in our 40th year of operation. It's a wonderful organization, and it was a wonderful organization when I joined. But I will say something just to kind of tie through that last, starting as a teller, that last comment. One of the things that's a real pet peeve of mine as a leader is when we have people on the front line that need to ask a question from any of us within the bank. My sense of urgency for that is maybe a little higher than some others. And it is, absolutely necessary that we support those people on the front line, because they're supporting our customers. And I've been on that front line trying to find somebody to answer my question, or calling around the organization, "Somebody, please help me. I've got a customer standing here in front of me." So yeah, I think some of our team members were a little surprised at how focused I am on that, we want those employees at the front line, first of all, to be empowered. That's really important, that they're empowered. But then secondly, if they do need help, that we are there as quick as possible, as much support as possible, and helping them serve our customers to the best that they can. So I would say that's probably part of what we focused on, is really helping to make sure we're elevating the service, although it was already very good. And I also think it's important, and this is something we've spent some time talking about, is having each of our employees understand exactly how what they do every day contributes to the overall good of the organization and overall good of the customer and our community. And to me, it feels like tying that through and helping them feel like there's a sense of purpose, like we're here for a purpose, is so important. And so if I could tell maybe one little story. During the pandemic, my in-laws, my mother-in-law, father-in-law came and moved in with us, and he's 95 and she was 90. And they were saying just how lonely they were during the pandemic. And so it kind of dawned on me, and I said to our employees at one point on a town hall, let's just reach out to our customers right now. And I'll say the average age of our customer is 68 years old. We have mostly catered to seniors as part of our business plan. So we spent time, and I said, don't ask for business, just say, we're just doing a check on you, just wanting to make sure how you're doing and let you know we care. And the comments and responses from customers was so significant. And I just think it's things like that that really make it human-centered and really demonstrate that we're not just there to do help them with their banking. We're there to really serve them and to help them and look out for their best interests. And, we do a lot of training internally about senior financial elder abuse because it's happening so frequently. And, how do we help protect our seniors? How do we help protect people against fraud? And we do training at our different branches on that and invite in our customers. So it's, I think, really that human connection and really trying to help our employees know that we can and do make a difference in our interactions with our customers. So I would say that's a big part of what I focused on. When I joined, we were not even quite $7 billion in assets. We're now over $8 billion in assets. So we've grown and we've been successful. But I always think success comes when you focus on doing the right thing and have integrity and do the right thing for your customers and your employees and your shareholders. And the shareholders come when you do the others first.
I couldn't agree more with you. The power of the people and the power of the community bank is a driving force, across the nation and what is happening with the current economic climate. So, and I have to applaud you. Everything that I've seen so far with Luther Burbank Savings is impressive, and that's what it led, to a big merge. I wanted to congratulate you because you are merging right now with Washington Federal, which is an exciting stage and exciting news for both the banks, because Luther is about, as you said, 8 billion, if I'm correct. Washington Federal is 22 billion. They're about to merge. So tell us more about that, some of the factors that led to that merge.
Sure. So I will say that part of the business model at Luther Burbank Savings has been that we generally have very little credit risk. We are very focused on taking very little credit risk, but we've taken a little bit of interest rate risk. So over time, that served the bank well. We've done well through all points of the economic cycle, very little with charge-offs, but a little bit of fluctuation when interest rates fluctuated. Initially, when the Federal Reserve was saying that that inflation was transitory, we had not a lot of concerns. But when they said, we got to tap down inflation because it's going out of control, that's when we said, our interest rate risk is, an issue that will become an issue if they keep raising rates. So let's see if there's a partner out there that we could find that we could basically merge with, who has had interest rate risk in the past and who's dealt with it. And WaFd is exactly that partner. They've been in existence over 100 years, actually, and they were interest rate risk, liability sensitive. So meaning in a rising rate environment, they didn't do as well. And a number of years ago, maybe 15 years ago, they decided to change over and become more asset sensitive, meaning when rates go up, they do better. And they've made that transition very successfully. So in 2022, early in 2022, we connected and had some discussions. And then that kind of escalated in September of 2022. And by November of 2022, we announced that we were going to merge. And we priced it in a way where we felt like we knew that our interest rate risk was a bit of a concern. So we priced it accordingly. And we believe on a combined basis, it's going to be even a better organization all the way around. They're in all of the Western states except California. So we helped them get into California. So strategically, it was a really good move for them. Also, we primarily focus on affordable housing. What we do is primarily multifamily lending. About 64% of our portfolio is multifamily, but over half of that is in low and moderate income communities. So what we work on is making sure that there's affordable housing in our communities. And we also have single family lending that we do, and we do first-time home buyers. And so they're going to continue a lot of that in not only California in our communities, but around their full branch network. So we're very excited about that. And now we'll also have in all of our 11 branches the products and services that they offer. So, we really believe it's a win all the way around for, WaFd, for our shareholders and customers, and for the communities that we serve. And I'll just mention that we had over 100 letters written by the nonprofits that we work with and that WaFd works with, writing letters to support the merger. And, they said, we think this is a really good thing for the communities and we support it. And, I know Brent Beardall, the CEO of WaFd, and I were both blown away that we got so many letters in support of our merger. And I think it just goes to say, their culture is so similar to our culture. They really do, focus on serving their customers and working in the community to make a difference. And I think, I've said this, been in banking too many years, but, you can make anything look good on a spreadsheet, you change some formulas and do different things. What really makes a difference in a merger, and I've probably now done 12 buy side and sell side, what makes a difference is the culture and the alignment. And if you don't have that, doesn't matter how good it looks financially, it's going to struggle. So anyway, I think it's exciting because I think all the way around it's a win, and we're excited to get it done. We're just waiting for the FDIC to give us the approval. So,
congratulations again. I know it's finding the right partner to impact the community banking space and having the culture, because culture is something that here at Travillian and in every community bank we take very seriously. So tell us a little bit more about Luther Burbank's culture.
Sure. So yeah, culture is everything. And when I first got to Luther Burbank, we spent a lot of time, I mentioned, talking about what our purpose is, how we serve the customer. And we started having in-person roadshow, I call it roadshows, going to each of our branches, meeting with people and talking, in smaller groups. And then during the pandemic, we started doing quarterly town halls through video conference. And we had one of our employees write in and say, what, could we do it more often than just quarterly? So we then started doing a monthly. And what I love about our video calls, people can write in and ask any question. And but what's so great is our chairman, who is the founder, his name's Vic Trioni. He, every single time, every single town hall, every month, will talk about some of the great service stories that we've heard about because customers have told us about them. So, and sometimes it's an employee tells us about something they saw another employee do. But I have to tell you, some of those customer service stories are just amazing. And it's really, we do that to help really make sure that we all understand we can make a difference every day. And sometimes it's just a small gesture that somebody does that really makes a difference for a customer or another employee. And so that's, I think when we talk culture, things like that, I think help the employees understand that we really are making a difference and feeling like they're part of something that's bigger than each of us individually.
Spot on. Culture is extremely important. And Simone, being a CEO of a bank and running the bank, can you share with us how important it is developing the right culture for talent growth?
Absolutely. Culture is, I know we've talked about it probably more than a lot of people do, but culture is so important. And how you bring on talent, I mentioned employee orientation and talking to new employees about the culture and about the organization and helping them understand they've come into something really special and we want to keep it special. And so it is important in talent. And I will say, for up until just recently, the vast majority, we would have well over 60% of our new employees coming as a result of referrals from existing employees. And we do provide a benefit to employees if they refer somebody. But I think it says a lot when you have so many new employees coming as referrals from existing employees, because most of us don't want to refer somebody if we're not happy and not excited about what we're doing. So anyway, that's, I think, again, when you have somebody that who says, what, this is such a great place to work, you should come work here. I think helps us. Our employees are our ambassadors to help us bring in new talent.
Can you share with us a couple of ways that you have developed talent, new talent in an industry that struggles with succession?
Sure. So, developing employees and helping them feel like there's opportunities to grow, I think is really important. I think there are some people, and there always will be people, who just want to do kind of what they do every day, and they get great pride in doing that, and that's terrific. But there are others who really want to make a career and want to learn and do more. And so we have online learning programs. We've, from time to time, brought in outside training to help support our employees. I will say, when I started, we had not sent anyone to Pacific Coast Banking School. And as I was talking with the person who was the frontline in charge of our lending sales, he said to me, I really want to develop. I want to someday get into the C-suite. And so I encouraged him to go to, and that was back in 2019. And I said, why don't you go to Pacific Coast Banking School? And he did, and he graduated, and he's now our chief credit officer. So I think, helping people understand, first listening to what it is they're looking for, and then helping them with how a road path of how they can actually achieve it, I think is important in terms of developing talent and not trying to make it one size fits all, because one size doesn't fit all.
That is fantastic. That is the way to lead. That is, a leader showing to other individuals, to other professionals, how to progress their career, how to advance their career. And I believe that, every great leader has like a mentor. And I would love to, to learn, what was your mentor? What was the person that helped you more and developed skills, traits within you?
Well, thank you. First, I have to say I owe so much to a lot of different mentors who have been very supportive over the years. But I'll go back to my time at Hawthorne Savings, because that was such a memorable time where, the CEO left in, I think it was the end of 1998 or 1999, long time ago. And here I am giving names, Dick Cupp, who was somebody I worked for, who unfortunately has since passed away. But there were several others, and I'm giving names of these people. And by the way, all men, because at that time, that was kind of just the way it worked. I didn't know a lot of female CEOs. And he just looked at me, and his name was Gary Brummett. He was one of our board members. And he looked at me and said, Simone, why don't you put your hat in the ring? Why don't you try? And it was like I hadn't even thought of it. And so we talked about it, and I said, well, let me think about it. I was in shock because I was a CFO at that point. And so we talked about it, and he encouraged me, and I put together a PowerPoint. And I think part of it for me was, he saw something in me that I didn't see in myself. I didn't feel like I had it. But his encouragement gave me the confidence to go in and make a presentation to the board, who, by the way, was all men, looking back. And I am very grateful to them for taking the chance and giving me the chance to be the next CEO at Hawthorne Savings. And, we were able to sell that bank very successfully. We developed it and did a lot of different things there that helped create value. And so, yeah, I give a lot. I'm very grateful to Gary Brummett. But again, I could probably sit here for another hour or two and name a whole bunch of different people who were very supportive and helpful throughout my career.
Oh, that is awesome. That is awesome. Being a leader, being a CEO for such a great bank, what are some of the specific traits that you're looking, in emerging leaders?
Sure. So I personally believe that humility is really important, that people, self-awareness and being willing to take feedback and to grow and want to grow is important. I think that heart of service for our business, because we're in the service business, is really important, and it's hard to train that. I mean, I have said, as we're interviewing people, even, you know, for the front lines and in our branches, watch to see how they come into the building, because they many times will meet in our branches and interview, you know, the branch manager will interview them in our branches. And I say, watch how they come into the building. If there's someone right next to them, do they hold the door for that person? Or do they just kind of like, you walk in and not really pay attention to the people around them? You know, if you know, they're sitting down, you know, how do they interact with like the first person they see, who many times is, you know, the reception person that is greeter, and that says a lot. And so I think it's that service mentality of how, you know, how somebody is service oriented towards others, because I think, again, in the service business, you can't always train for that. I don't think you can really train for that. I think that's part of kind of how you're raised, quite honestly, and who you are as a human being. And so I think that's a trait that I personally really look for in all parts of our business, not just in, you know, the frontline service, but, you know, if somebody has that service mentality, you know, the people in our back office serve the people in the front office who serve the customers, you know, so not everybody is serving the customers, but we all are serving at least, you know, somebody that's serving a customer. So anyway, so those are some of the traits, and you know, inquisitive, I could, you know, go on to a little more, but I would say those first ones I talked about were probably the most important traits.
Now, talking about like leadership, can you share with us, you know, a couple of how Luther Burbank Savings is able to retain talent over the years?
Well, it's yesterday we had an employee who celebrated her 30-year anniversary with us, and she's one of a number who have been with us many years. Our CFO has been with us, I think, over 30 years now. But yesterday's was really hard because on the same day, the night before, she lost her father. Sorry. So I wrote her a personal note and just said, you know, in an email, you know, I'm so sorry to hear about your loss. And I really wanted her to feel that sense of sympathy. And I said, you know, I'm sure it must be a little bittersweet to also be celebrating your 30-year anniversary, but know that we're all part of the Luther Burbank family. And so we're grieving with you. And, you know, I just, sorry, I'm getting emotional, because that is how we retain people, is we show them that we care about them, and not just we care about the work that they do. And, you know, you're doing a good job because you're getting things done. No, you're doing a good job because you come in and you're a human being, and we appreciate who you are as a human being and everything that's about you. So I think that's in my part. Sorry.
No, it's definitely it's okay, because I admire people and organizations just like yourself, because you are a part of the community, you impact the community, and you're doing it the right way. You're following all the procedures and the guidelines, you know, that they are in place. But above all, you are people to support other people in the community, and that says a lot, because there are organizations and organizations, but what makes a difference is the ethics, the values, what we bring into the table, and how we support the community. And I'm actually glad that you shared this with us, because that's a big differentiator from many other banks.
Well, people first.
Community banks, they do this.
Right.
Other banks, you know, it's not a right or a wrong answer. They have like a different approach. They have a different strategy. But I always love to hear people being next to people and supporting each other.
Yeah. And we are people first, right? In all aspects of what we do, no matter if it's work or, you know, friends, church, home, whatever, we're people first. And remembering that in showing you care is, I think, most important. And that, I think, does help people decide to stay with your organization. And what do they say? People leave organizations or they leave bad bosses, or I don't know how that goes. They stay for good bosses, but leave organizations. I think that's how it goes. Anyway, I do think that you know, when people feel embraced and cared about, they will stay.
The talent acquisition and development is extremely important. So, and a way that you retain it in the bank is unique. And I congratulate you for this. They are, you know, crucial for operation excellence. Can you share with us, you know, a couple of like more specific attributes that you look that play a role to success?
So I do believe, similar to my emotional response just now, having leadership within the organization that understands that we're people first, and that really also, it can't just be one person, can't just be the CEO, but really encouraging leaders to interact with their team members and to get to know them and to show how they care. And even things, we'll do potlucks and things like that to just be able to spend some time with each other. And I will say, when we went back into the office, and we're hybrid now, so not everybody, but initially we asked everyone to kind of show up on the same day. The chatter and the hugs and it was just exciting to see that they really care about each other. And I do, think that that's important too, that we have to have leaders that show that they care about the employees, and then employees that, take that opportunity to get to know each other and express that and become friends, because, we spend a lot of time together. So.
Diversity and inclusion, that's what it is. And it's incredibly important for any organization or in any bank. Talking about diversity and inclusion, how have you developed the bank with your diversity and inclusion program?
I'm glad you asked, actually. I cannot tell you where we were when I started in 2019, but one of the, in terms of our diversity of our workforce, but today, and it's only recently, 51% of our employees are minorities, which we tipped over and went to 51%, which quite honestly in California, it should be more than that when you look at the diversity within, our population. So how have we done that? It's been a very focused effort. So we decided that every single open position, we needed to make sure that we had at least 2 diverse candidates, and they had to be qualified candidates. And I'm proud to say over the last 12 months on a rolling average, we have either promoted or hired 72% minorities as a result of just making a change. And we have worked with HR to also say, make sure if you really interview the candidates and feel like there's really a qualified candidate and the manager maybe has a blind spot and isn't maybe embracing that qualified candidate, let's kind of have a conversation with the manager and, let's make sure that we help them move past the blind spot and really see the qualifications. And I think it's helping all of our, hiring managers look beyond just what we see in I hate to say in the mirror, but looking beyond, looking for someone like ourselves, and realizing that when we have diverse candidates and when we have diverse employees, we actually become so much more rich as an organization because we learn about their cultures. And I have to say, it's fun when we do have things like, the potlucks, and you get all kinds of different ethnicities bringing their food, and it's just, it is a wonderful, rich, environment to see the diversity in our workforce. So I'll also say that 65% of our employees are women. And 45% of the 9 top managers, key officers, including myself, are women, so 45%. And it's not that we've said we need to hire women, it's that we've said we want to hire the best people and retain the best people. And when we go through the interviews, if it's a woman or a man or a minority, or it's, that's what we want to be looking for, is bringing on talent. And that fits some of the things I talked about earlier too, that has that, service mentality and focus.
You've done like a lot of things from what I'm hearing. What would be your advice, Simone, to the other community banks out there looking to further grow their diversity program?
So I do think one of the things that's really critical in terms of getting, encouraging diverse employment in employee base is to make sure that you do have at least 2 candidates that are diverse, that are very qualified. It's not just kind of throwing in 2 candidates, but it's really finding very qualified, diverse candidates, and then really working to ensure and encourage that your hiring managers are really looking at the qualifications and thinking through, how can we round out our team and let's get the right best person. And I think that helps build diversity. But if you don't at least have diverse candidates, and sometimes that means you reach out to different organizations. And I'll mention when I joined Luther Burbank in 2019, I was the second woman on our board. And we didn't have any diverse board members. Today, there are 3 women on our board, and we have 2 diverse board members. So, it's not just, and we've done that working together with the board to create that level of diversity there, because it starts at the top. If it doesn't start there and with me and helping the rest of our organization, embrace it, it's not going to happen. And I think sometimes people will have a diversity officer and kind of everyone thinks it's their job. It's not their job. It's all of our job to embrace diversity and build, diverse organization.
Absolutely, absolutely. Let's zoom in a little bit in the California banking geography. Looking outside, the community banking. Can you share with us what are some of the challenges that the local California market is facing right now? How these challenges are being addressed and how they are positioned, most of the banks, for these kind of challenges.
Sure. So I will say Luther Burbank is a little different than a lot of other community banks because we do focus on primarily residential lending. So I'm going to put us aside for a minute and talk about businesses, because that's what most community banks lend on. And they lend to small businesses. In some cases, they'll lend on commercial real estate as well. And I think in California in particular, there's some, kind of a combination of things going on, right? I think in some of our big cities like San Francisco and Los Angeles, we're seeing some issues with high-rise office buildings and people not returning to the office. So I think, I would say most community banks haven't lent on the big high-rise buildings, but if they have lent on, some office buildings in the suburbs. That's something I think we need to be monitoring the community banks and making sure that we have a good, solid customer behind that, borrower that is going to keep those office buildings either, completely leased or keep the cash flow coming. So that's one area. I will say we've heard a lot about small businesses struggling. Some have not fully recovered from the recession. And in particular, with interest rates going up, many small community banks will lend on small business, loans, and those are very generally tied to prime. So, with prime going up, the price has gone up, and yet the profits haven't maybe necessarily gone up to the same extent. So I think there'll be some challenges ahead of us, but I do think, and, maybe I'm a little Pollyanna, but I think community banks are needed. I think there'll be some mergers like our merger, but I think we'll always have a need for community banks. And I know some of the bigger banks are closing branches, and community banks are in some of those communities serving the customers. So my all-time favorite movie is It's a Wonderful Life. And, I kind of think as you think about community banking, that's, and you look at the PPP loans. We at Luther Burbank didn't make PPP loans, but a lot of community banks were right there standing beside their customers, making those loans and making a difference for those customers in the communities. So yeah, I think we'll see some few struggles here, and hopefully as rates do eventually come back down, which I think they will, then I think that will help relieve some of the pressure on some of the small businesses. And I'll talk maybe for a minute about what we do, but honing in on that. So while we don't do any small business lending, almost 98% of our loans are on residential properties. So we do single family and we do multifamily. And I mentioned earlier, multifamily, we do mostly workforce housing in low and moderate income communities. When you think about what's happening, California, and I'm going to estimate, has about 30% of the homeless in our country in California. And so the need for housing is so significant. And so we are, proud to help work to continue to make sure that we're funding and providing funds for affordable housing in particular.
This is awesome, and thank you for sharing that. Just by curiosity, are there any emerging like sectors, segments of the economy or industries that the Luther Burbank Savings is interested in supporting?
So again, the housing piece is what we do. And I will say, I think it's now like 1 in 5 people in our state can afford to buy a house. So personally, I'm actually currently the chair of the board of the Federal Home Loan Bank of San Francisco, which also works on affordable housing. And so trying to find, if there are ways that Luther Burbank Savings can work with the Federal Home Loan Bank and others to find solutions to the crisis of affordable housing in this state is something that we're very focused on. I don't think yet we've gotten a solution, which is why 30% of the homeless live in our state. But I think we can't give up. We have to continue to work to see if we can find a solution to house people and house them affordably and put a roof over people's heads.
Be able to do this the best thing for the community. That's the answer. That's what most people need out there. Let me zoom out a little bit, and I want to talk a little bit more about the community banking space. I know it's been a roller coaster year for a lot of countries, a lot of economies, and we had a roller coaster year as well. Can you? What is your perspective? What is your estimate for the economic climate for the next 6 to 12 months when it comes to the community banking space?
I do think a big part of banking, so I'll say a couple of things. Banks will reflect the economy in their community. So if the economy is growing and robust, the banks will reflect that. If there are struggles, the banks will reflect that too. And I think with the interest rate environment that we've seen, the rapid increase that the Federal Reserve Board of Governors has or not the Board of Governors, but the board that sets interest rates at the Federal Reserve, the very, very fast it was just like a rocket taking off. Interest rate hikes have had some have created some issues for some of the community banks. In some cases, it's been positive, but then, as I mentioned, if small businesses are struggling because of that higher rate, that then means that the banks will have some challenges. So I think if we do see inflation come down, which it seems like it's starting to come down, which means that those fast increases in rates actually worked, did their job, then I think once we see, again, a more stable rate environment at a lower rate environment, that will help encourage, I think, some of the growth, but keeping inflation, at a much lower level.
Yeah, and I couldn't agree more with you. This is, what we've seen so far. This is what most of the executives and are reflecting as well. And we hope to see that the new year will bring some new changes, and we'll see the new year with a new perspective and being optimistic and having better results than this roller coaster year. I know that if I have my information correct, I know that your merge is about to be completed. Has been extended by a couple of more months by February, but is about to be completed very soon. But that is going to form another giant in the Californian market. Bank of California with PacWest, on the one end, and then Washington Federal with Luther Burbank Savings on the other end. These are two giants forming right now and driving the community banking space in the West Coast and specifically in California.
Well, let's talk though for a minute. We lost Silicon Valley Bank, which was what, 200 billion, and we lost First Republic. So while we're going to be close to 40 billion, and I don't know, I think they're close to 40. I don't know exactly the size of PacWest and Bank of Cal, but we're nowhere near the size of those two other organizations. And obviously, First Republic, was taken over by Chase. And I'm going to say this, I'm a Chase customer. I will acknowledge that. And I think they do a great job. But not everybody wants to bank with Chase. And Absolutely. So they want options to bank with a smaller community bank that maybe provides the more human-centered service than maybe a Chase can provide. First Citizens that took over some of the business of Silicon Valley Bank. It'll be interesting to see how they evolve. But my point is, there's kind of a big hole when you think about, the business that those two banks did.
Yeah.
And the smaller two banks that we just talked about, they're growing for sure, but they've got big shoes to fill to be able to take up and bring on the customers of those other two banks. And I think there will be some people that will want to leave those other two banks and find new homes with, smaller community-focused banks. I could be wrong.
Absolutely. Yeah, that was my point, because I know that these mergers are within the community banking space, and we're not talking about like the commercial banks out there, because they have like a different approach. They have a different strategy. What is your perspective? Do you think that other community banks will follow as well? They will create merge with each other, MOEs, or just acquire other banks in order to compete with the new formation and the new players in the market?
I think we will see more mergers. I do think. There is frustration from some of the people who've done many mergers, and I'll say. I haven't talked to Steve Gardner, for instance, at Pacific Premier Bank, but he was a serial merger, acquirer, and did a phenomenal job of acquiring a lot of different banks. We sold one Heritage Oaks Bank to him, but they have bought quite a few banks and run them. He's got a great team and a good operator. But I haven't seen him in the market recently to look to buy. Now, that doesn't mean he hasn't looked, or maybe he's decided he's going to take some time out. But it is surprising to me to see, some people who historically have been, buyers over time, who aren't in the market right now. And maybe they're waiting to see if we do have banks that are, a little bit in trouble or something, to see if they want to jump in at that point. But I also think it could be, and this is all speculation, that some of it is just recognizing that it's a difficult time through the regulatory process to go through the process to do a merger.
Well, that wraps it up. Thank you so much, Simone. Thank you for your time today. Thank you for being with us, and thank you for sharing all the insights and experiences and your perspective about the community banking space. Thank you, and I appreciate your time.
Thank you, Dimitris. It was really an honor to join you today, and want to thank you and Travillian for the opportunity to be part of this webcast. So thank you.